Hey everybody, and welcome to the PlantStock channel. If we haven't met yet, my name is Jesse, and today I thought we could talk a little more about Beyond Meat and what's been going on the last couple of days. Just about a week ago, I made a video why I believe Beyond Meat is plummeting down, and the last few days it's been plummeting even more. So I thought we could talk about what's going on. But before that, as always, folks, I would truly appreciate an early thumbs up to help spread the video to more people out there, helping me out and the community. And if you want to keep getting more information regarding Beyond Meat or other plant-based companies out there, make sure to subscribe and don't forget that bell button. Thank you, folks. I truly appreciate your help. Now, let's just take a quick look then at the stock chart. Funnily enough, when I'm talking about that the stock is plummeting, it actually does seem that it is doing quite well at this moment, which isn't very surprising considering that it's gone down as much as it has. If we take a look at the last 5 days, it was up at 114 and then ran down towards $104, and now it's actually up around $3.5. This could be temporary. The market has only been open for about an hour. This could change, hoping it doesn't, of course. But yeah, what a wild ride we can see right now. So let's try to understand what is going on. So one of the biggest reasons why the stock started going down is that one of the larger analyst groups, Piper Sandler, downgraded it. And I don't know if you have seen Jeremy from Financial Education. He has an app called The Hungry Bull, and I thought it would be interesting just to look at what they wrote about this, because they actually came out with an article about this today. Beyond Meat is down 50% from its all-time high. So is there more pain ahead? And it's interesting. I really like this app in many ways. It gives you a lot of information that you need. The only problem is I wish they actually had desktop version. That would make it a lot easier to actually talk about it when you're making a video. And now I'm taking pictures of my phone and sending it to the desktop then. But sure. So if we take a look at it here, as they stated here, they hit an all-time high of 221 earlier this year. We know what was going on. That was when they got the PepsiCo deal, right? And then it's basically been a downtrend in one way or another to about 50% from that high, right? And as they stated here, the pain isn't over for us shareholders in the company. So I think it was yesterday that Piper Sandler, their analyst Michael Lavery, and they were quite bullish before. Now they're concerned that they think it's going to be a big issue for them now in the next couple of months. In the Q3 and Q4, so they have downgraded it. And one of the reasons why they've done that is related to, as we've talked about on many videos, that Beyond Meat itself does believe that there might be issues with the kind of revenues they'll have before Q3. Like Wall Street was hoping around $150 to $160 million, but Beyond themselves is talking about between 120 to 140 million dollars, and they got 149, almost 150 million in Q2. But the reasons being that we still have an issue with the overall pandemic, right, and the D variant of that, making it worse again for a lot of people in a lot of situations, especially if you haven't taken the vaccine, right, and that could lead to people not going out to restaurants again. So an overall issue, considering that Beyond Meat does have a large portion of their revenues coming from restaurants. So they've basically downgraded it to about $95. So roughly 11% below its current price a couple of days from yesterday when this came out, actually. So, but what I do like here is that the Hungry Bull is still coming up with some positive perspectives here. As they state here, quote, despite the short-term blunders, this could be a good dip buying opportunity for Beyond Meat as a long-term play, and that's for sure. The company is a pioneer and early leader in the emerging plant-based meat market. They have also plenty of exciting partnerships, including one with PepsiCo, which will see healthier plant-based snacks hit the shelves in 2022. We're going to talk more about that, so stay tuned. The stock is likely to lag for some time due to supply chain disruption, COVID hindering demand, and scales of economy issues. But once that's worked out, it could provide some quality returns. So that's basically what I always say when it comes to a company like Beyond Meat. It needs to be a long-term play. And considering the kind of money now, what the stock is actually worth now, if you take a look again, yeah, it was cheaper yesterday around $105 and $104, but $111 when you compare it to where it's been, right? It was actually trading for several months around $140, $150. So you are getting a good discount here. And you can see it's already down below 3% again. So we'll see where this stock takes us today, right? I do think we still are actually coming into, getting some pain ahead. I think we have to expect that. Market cap is around $7 billion. We haven't seen that for a long time. But what I did find interesting is an interview here on Yahoo Finance, what they talked about concerning. So let's just take a look at what they talk about, and I'll react a little to that.
Downgrade by the folks over at Piper Sandler.
That's right, Brian. If we take a look here at Beyond Meat, of course, the stock has been down 11% so far for the year to date, adding to those losses today. And if we take a look at what Piper Sandler really saying, the analyst there, Michael Lavery, saying that the company's all-channel retail momentum lags consensus expectations. And one of the big concerns here is on that food service estimate side when it comes to what Wall Street is expecting of Beyond Meat. Now, this is a company like a lot of these sort of dual and omni-channel food companies that, of course, has that retail side of the business, that side that goes into the grocery stores, and that has still been holding up quite well over the course of the pandemic, given the strength in grocery sales overall. But then, of course, you have that, going out, going to restaurants, food service portion of the business that has, as Lavery is saying here, still been lagging and likely to continue doing so. And I think as we consider the ongoing Delta variant, the ongoing coronavirus concerns, and what looks like some more stay-in-place type behaviors among consumers, this is not necessarily a good sign here for Beyond Meat going forward.
Yeah, just further digging in here, Emily, really, I would say this is a savage downgrade. You don't normally see underweight ratings on Wall Street, especially with some of these hot, buzzy food companies. But the analyst noting here, which I thought was interesting, we believe current retail trends are running below levels needed to support consensus shipment expectations for the third quarter and potentially in the fourth quarter. And as you mentioned, Emily, tracking a lot of the good industry data here and really suggesting that Beyond Meat sales are just not trending where they are. And if that is the case, Emily, you also have to, I think, get a little worried about the restaurant space. It is a Burger King. It is McDonald's. They may not necessarily be super aggressive in the plant-based meat department just yet, but Beyond Meat has a lot of exposure to the sector. And if they're seeing slowing sales in this part, chances are the restaurants are also seeing slowing sales as well.
This is what I don't understand, because as we know, we just released a video on that. We know that when it comes to the deal with McDonald's, it's going to really start rolling now in 2022, right? It's starting in the UK and Ireland, and it's moving towards the rest of Europe. It's going to move to the US. It's a global one. We're talking about thousands and thousands of restaurants, right? And what Piper Sandler has done, I mean, I understand it from a short-term perspective, but again, from a long-term perspective, we're talking about a year, 2 years, 3 years from here. I mean, the McDonald's deal is a 3-year relationship, right? It's a 3-year partnership that is beginning now. For me, this is just short-term noise. I'm expecting those revenues to be extremely much higher in 1 to 2 years from now. So downgrading it like this, it's great for us retail investors, for sure, because this is a buying opportunity.
This potential wild card that is Pepsi. Now, Beyond Meat inked a deal with PepsiCo several months ago to work on several undescribed or uncertain products, plant-based products to this point. And those products may come out over the next 12 months, but the wild card is there. When you're working with a company like PepsiCo, they are a marketing and development machine. So if Beyond Meat can ride on PepsiCo's coattails, maybe it's pretty good.
That's exactly right. The PepsiCo deal is probably going to be humongous as well. As they stated, I mean, they have talked about what kind of products they might be doing together, and some of them would be healthy snacks. They've stated that in several articles, and I mean, Also, they've been saying that there would be some form of plant-based drinks. And as I've stated many times, that can't be soda, right? Because soda, Pepsi's different sodas, that's already vegan. It's already plant-based to some extent, or plant-based friendly anyways. So what could that be? And we do know, it wasn't long ago, that Beyond Meat filed for a new trademark, I think, Beyond Milk, which means that they are thinking about going into the dairy sector, right? And could they do that with PepsiCo? Well, that would be really huge, I think, for both companies, for both PepsiCo and Beyond Meat. So again, I think we have a lot of things to look forward to here. And as you stated, the kind of connections that a company like PepsiCo, my understanding is the second largest food company in the world, right? So they have connections everywhere. And when they start marketing something they believe in, moving into this kind of sector, I think that means just really good things for Beyond investors. That's my personal belief. Again, if we just take a look at the stock chart before I let you guys go, if we take a look at the 52-week range here, between $99 to $221, we are definitely among the lowest in a long time. And if we, again, just take a look at the PE's ratio here, now we're down to $15, and it usually trades around 22, 23, folks. I think this is an excellent opportunity. But again, I want to point out, I do expect that we could see even lower numbers in the next couple of days, maybe the next couple of weeks, because I think this could take time. Definitely this could take time. So, but if you are in this in the long term, if you're thinking 2 to 5 years, if not longer, I think you're sitting pretty here, and this is an excellent buying opportunity. And personally, if I had more free cash at the moment, I would go in like crazy. But that's me, and you guys, this is not financial advice, as you know, but this is just my own thoughts and opinions. So, but I think this is looking pretty. All right, folks, that was it for today. I truly hope you got a lot of value from today's video. And if you did, make sure to smash that like button and help me out. And if you want to keep getting more information regarding Beyond Meat or the Tattoo Chef, the very good food company, Oatly, to name a few, maybe Else Nutrition, then make sure to subscribe and don't forget that bell button. Thank you, folks. I appreciate you taking the time to watch this video, and I hope to see you soon. But as always, I just want to point out again, this was not financial advice. So do your own due diligence and invest safe. Folks, have a wonderful Friday. Hope to see you soon, and peace out.